Hello everyone, Namaste and welcome back to our channel. So you are watching Market Vision series where we would be talking about markets performance each single day. So today we would be discussing about how the market is expected to move and perform for 3rd April 2025. Let's dive straight into how the markets had performed for 2nd April and what is a way ahead for the next day. So as you have been watching the markets, there have been no, you know, strong movements that we have been seeing. Though there have been, on an intraday basis, good moves that has been taking, but on a positional or weekly basis, we do not see a strong momentum that has been coming in. So now, for us, markets are in a pause zone where it would further consolidate, and once it crosses those consolidation levels of parallel lines, then we would see some either decisive breakout or breakdown. So let's try and understand how the markets had performed today. So from yesterday's fall of roughly 1.7 odd percent, markets partially have recovered today roughly 50% odd. So Nifty rose up 166 points, which is 0.72%, and Sensex is up by 592 points, roughly 0.78%. So despite the other markets like European markets or the Asian markets did not perform well, still our markets ensured to close in green. So we have to understand from tomorrow's perspective how it is expected to move ahead, as we have lot of uh, important decisions to be made on tariffs. From today's trade perspective, there are majority sectors which closed in positive. Primarily reality, which has gained 3.61%, which is huge in terms of the kind of momentum that we had seen in all the reality stocks. Next is consumption, which did well, and there was positivity that was seen, and it gained to the extent of 1.55%. Majority of the contributors again were FMCG stocks, which has helped the consumption sector to move and perform well. Even banking stocks had shown positivity in today's trades, where the blue chip banking stocks were up roughly around 1.5 to 2%, which helped the bank nifty to move in the range of 1%. The institutions have been changing hands, uh, and from almost like 4 to 5 days now, FIIs continue to sell off our markets, and they have sold to the tune of 1,539 crores. However, DIIs have been supporting the sell off from the foreign institutions, and there was almost twice the amount of sell off that has been absorbed by domestic institutions. They purchased 2,809 crore in cash markets. So as long as domestic institutions support, we can assume that there is a uh, expectation of momentum to come in, or at least we may not sharply fall from here on. Lastly, global markets have you know not been maybe moving anywhere. So we see mixed performance across the geographical regions because of the tariff decision that is expected to be announced by Trump today in the afternoon, which would be like midnight, around 12 o'clock to 1 o'clock India time. So US markets are still trading in uptrend and have been positive by around 0.5%. However, Europe markets did not do well and they were down to the tune of 0.4%. And Asian markets, except maybe KOSPI, um, rest other markets have closed in positive, and even maybe China market, Shanghai, I think was flat. So overall, markets are expecting all the bad decisions to be taken out. Once that happens, maybe we could see a free movement that can happen or as an uptrend in the upcoming days, 2 weeks. So we have to continuously watch what other severe news that may come in, or events that may unexpected events that may come in. So as of now, for this week or maybe the coming week, we do not have any major announcements. Locally we have RBI policy that is expected to come in, and it is going to be indecisive, because there are no hopes that there would be a rate cut that could happen. And even if the decision of rate cut happens, maximum maybe zero point 0.5 basis, 0.25 basis points, which may not help the markets to react strongly, and that would be a change of the direction for the markets. So we have to see how maybe this week it is going to close, and then maybe upcoming week, what new events that are expected, or in the lineup. Now let's start understanding from the perspective of charts how the charts are expected to move, or what decision that we can arrive based out of the charts. So as we had discussed that markets took support at these levels, and immediately on the opening itself we saw there was a buying momentum that was seen in Nifty, and suddenly we saw there was aggressive buying that continued. uh, the continuous buying helped the markets to close at the higher levels. It is exactly at the previous day's body. It is fully covered, but then we see that long wick that shows a lot of selling pressure had been there. However, the sellers were unable to take the markets down. That is when on opening itself the market rebounded and have closed positively. So this is a strong sign that our markets may sustain at these levels even tomorrow, despite the Nifty weekly expiry, and gradually we might start trading in this consolidation zone, where we have a strong resistance at roughly around 24,000 levels, and then a good support at maybe around 23,200 levels. So once market moves out of this zone, only then we can see either breakout happening on the upwards, or maybe a breakdown that is expected to come downward. Now let's analyze. We have been seeing a lot of negative news, be it of war, be it of uh, Trump tariff decisions. Despite that, markets have been holding uh, with this strong support levels. So as long as these supports are maintained, this gives a lot of confidence that this low or maybe bottom will be intact, and we might only head towards the up upturn, or maybe upper movement. So we have to wait and watch another two trading sessions. It will help us to make a conclusion as to where market is headed towards. So let's understand from the perspective of open interest. So as you see, on the open interest there have been some unwinding on the call side at higher levels like 23,600, then slightly on 23,550. Okay, yeah, and then at 23,700 levels, then 23,000 800 levels, and even at 24,000 levels. So there is some uh, put additions that have also been seen here. So this shows that Nifty at least is not expected to maybe close at a lower end tomorrow. We surely have a strong support as well as resistance at 23,300 levels, and then immediately below that at 23,200 levels, and then strong support at 23,000 levels. So tomorrow, despite the Trump announcement and the Nifty expiry, looking at the PCR, both uh, overall as well as at the money, it shows positivity, or maybe no bearishness that is expected, at least for tomorrow. So at least we are expecting that the market would be in the range of like 23,200 levels to 23,400 levels. So in this 200 points itself, the market is expected to close and may not have any decisive movements. So that's it maybe from the open interest perspective. Now let's move on to Sensex. So Sensex also showed that positivity in terms of movement. However, it was not so strong as that we had seen in the Nifty index. However, still it is a 60 to 70% previous day's body that had been covered by a single candle, and like Nifty, uh, at the opening itself, Sensex was above the previous day's close. So that in itself is a positivity that can be expected, that in the coming days Sensex might show some upper trend movements. So as of now, we are still in the strong resistance zone, and a consolidation zone, where once Sensex crosses above these levels, then maybe some positivity could be considered, and then we might see consolidation for a bit, and then start to move up. If Sensex is unable to hold, previous days, highest point, or maybe the opening for tomorrow is not going to be, if in case it is not going to be above those levels, roughly around 76,700 to 77,000 levels, then we have to be cautious, because this zone is where if Sensex consolidates, then there are high probabilities of it to uh, take a downward move, and then we can continue sliding further. So it has to ensure that it is always above 75,700 levels, and it trades in the range of 70 700 levels to 78,000 levels. So that says that we are intact, and there is only positivity that is expected, and then the markets may not be falling further downwards from here on, because there are no unexpected events, at least for the upcoming weeks. So let's understand from open interest perspective how we are heading towards. So yesterday there have been massive um, put additions that have had happened, which shows that there is a strong support that Sensex is expected to take at 76,500 levels. There have been additions in calls at higher levels like 77,000, 77,500 and 78,000, which is presently far from the present at the money levels. Though PCR overall is positive, both overall as well as at the money. So tomorrow, since there is a Nifty expiry, so Sensex might be trading in a no zone mode. However, there does not seem that Sensex may come down. So this is seen in terms of the kind of open interest additions on the put side that we have seen. All this levels below 76,500 shows strong support for Sensex. On the higher side, I think only until 77,000 we have strong resistance, which with lot of put shorting will help. Higher levels of put shorting will help this 77,000 to take down. Now let's move on to Bank Nifty. So Bank Nifty comparatively has been very positive. So if you see, uh, Bank Nifty had closed at a much lower level of around 50,500 previous day. However, it opened high in the morning, and then from there it continued its buying trajectory, and it had already covered the previous days entire candle's body. So this in itself proves that there is a positivity in all the banking stocks, and that would help the Bank Nifty to move ahead further. So we are now in the resistance zone already for Bank Nifty. It might trade in this level for maybe a day or two, and then we might see a sharp up move that is expected. So looking at the banking stocks, this might take a strong support at these levels, like 50,500 levels again, in case if the market comes to those levels. It can act as a support, and then quickly come back to these consolidation parallel lines, and then from here on move up. So keep an eye on all the banking stocks, because even though if any other sectors in Nifty, Sensex may not show that positivity and strength, however, Bank Nifty or maybe the banking stocks can take a strong support, and that could lead to the next higher movement both in Bank Nifty as well as the Nifty and Sensex index. So now let's talk from the perspective of open interest. So there have been open interest additions that is uh, seen both in calls as well as puts. So at every 500 levels we see good positions that have been taken. Looking at the overall derivative positions, we still expect that Bank Nifty is having strength, and at each higher levels, as you could see at 52,000 levels, at 53,000 levels, we have huge put open interest that is seen. So that in itself talks a lot about the strength or the support that Bank Nifty is expected to take. And as it is and as it moves forward on the higher levels towards maybe 52,000 and 52,500 in coming days, we might see a lot of put additions that is expected to increase, which further will be boosting and give a support at each higher levels for Bank Nifty. So let's now understand from FinNifty perspective. FinNifty, though from the previous days, candle does not seem to be having lot of strength, but yes, it has recovered maybe one third of the previous day's fall. However, that is not enough, for FinNifty, because the kind of fall that we had seen at the higher levels, roughly around 4 odd percent is dropped already. Yeah, at least 3 odd percent we have dropped. So from here on, if the buying continues, then maybe we can see further back at these levels where there was a previous resistance. So we might consolidate for some time here, and then maybe move towards the positive territory for taking out all-time highs. So banking stocks and the overall NBFC and capital market stocks have to be looked upon because there is good strength in these stocks comparatively than any other sectors. So if the markets are headed towards all-time highs, these are the sectors that would first catch up. So keep an eye, and as long as they are trading at good support zones, uh, we can keep our positive momentum at these stocks by buying it. And then once it maybe breakouts, we could surely see higher zones taking out easily. From the open interest perspective, we still do not see a lot of positions to understand where the market is headed. Of course, yes, at 25,500 levels there is huge resistance for FinNifty, but at each of the lower levels there is good put additions that is happening, that gives us strength and support at each downfall. And also 25,000 levels, though we have uh, good resistance, but we see a lot of put additions too that had happened, though maybe not immediately yesterday, but the previous put uh, you know open interest that we could see, that remains at least intact, with slightly unwinding that we had seen. But in a day's time, there could be a lot of changes that is expected to happen. And something important to notice, at each 100 points or maybe 50 points, we see some put additions also being seen at higher levels. So this is something that over a period of time might build up massively and could add to a lot of support at the higher levels for FinNifty. Now let's quickly understand from the perspective of FII and DII data, and what markets conclude based on these positions from the institutions. So on index futures by FIIs, they are short, um, as is from a good week long time, and on stock futures they are massively long with 16.53 lakh open interest contracts. On index options, on call options, they are mildly bullish with 21,507 contracts. At the same time, on put options also they are long. uh, so again this shows positivity. So net uh, overall positions, if we see from previous day, uh, FIIs are overall short. So they have been long input options. So that means they expect the market to maybe not move up. And on call options, though it is not huge, so net they are in negative. On proprietary traders, they are mildly bearish on index futures and short by 32,250 contracts. On stock futures, again they are mildly positive with 3.91 lakh contracts that is getting carried. On call options, they are short by 1.13 lakh contracts, and on put options as well, they are short by 1.43 lakh contracts. So net there was a change of 30,266 um, contracts. So looking at the proprietary traders positions, it seems to be indecisive. So maybe tomorrow, as far as the Nifty expiry is concerned, we may not see a huge movement happening. From the retailers perspective, they are long in index futures, mildly long, I would say. In stock futures, they are massively long. In index options, they are long on call options, and they are short on put options. So net there is roughly around uh, 88 1323 long contracts on index options. So this is a little bit worrisome. As long as client or retailers are long, we have to be cautious. We might not see a lot of downfall tomorrow, but at the same time, markets may open flat, move little bit, and close at the opening levels itself. So tomorrow's expiry may be calm, but yeah, we have to see how the positions are taken immediately next day in the morning. Now talking from the perspective of cash market, so DIIs are long. Uh, they have bought to the tune of 2,809 crores, and FIIs are short to the tune of 1,539 crores. So as long as FIIs do not come in the buying zone further, we might not see the markets moving anywhere else. So we might consolidate till the time FIIs keep selling in the cash market. The day they buy in the cash markets, maybe from that particular point in time we can start being positive about our markets, and we might soon start to emerge and move towards the higher highs. Yeah, that's it from the perspective of open interest and institutions data. So until tomorrow, uh, trade cautiously, uh, especially during the expiry days, because we might see mild moves no matter what. So it is very very pertinent to ensure that we do not lose in consolidation kind of markets. So trade cautiously and trade with maybe less number of lots, which will help you to control your emotions, as well as have a proper risk management, as long as you are trading in your limits. So thanks, keep following us on our social media handles, on our website, and continuously keep supporting us by watching our videos. Thank you. Subscribe to our channel.